In this lesson, I will explain to you about compound entry in accounting. As I have told you that each transactions affect at least two accounts. But if the transaction affects more than one debit or more than one credit, then it is called the compound entry. Here I have set few examples. With the help of few examples, we will learn the concept of compound entry. So see here, the first transaction is purchase office equipment of $3,500. A cash down payment was made today of $1,000 and the remaining $2,500 will be paid in 30 days. So first of all, you have to see which accounts are affected in these transactions. So first here we have purchased office equipment. Right here I have made the T account. This is the debit side as I have told you, and this is the credit side of the T account. So here we have purchase office equipment, and office equipment is an asset, right? So assets, and the normal balance of assets is a debit side. It means assets increases on debit side. Here we are going to purchase the office equipment. It means our office equipment is increased, so we have to write down in the debit side. But before going to write down, we have to write down the date. So suppose it is May, I will write down 2018 May, and the date of the transaction is 1st. So here I will write down office equipment and the amount is 3,500. Then you have to decide how you have paid for this 3,500. As I have told you that there are only two ways to pay. One is cash, whatever we buy we pay cash, and debit card and checks are also included in cash. And the other method is on credit. So here simply you can consider just like a credit card. Sometimes we pay cash, sometimes we use our credit card. If we pay cash, so here we have to write down cash, and if we use the credit card, so we have to write down the accounts payable liability. So our first account is the assets, and assets increases on debit side. That's why I have written on the debit side. Then we have to decide what is credit. So see here how we have paid this 3,500 will let us know the credit accounts. So 1,000 we have paid cash out of 3,500. So cash is also the asset, and asset is decreasing because we are paying 1,000, and if the assets decreases we have to write on the credit side like this. So cash, and cash is whatever we are going to write in the credit side, we have to write down in by using indentation. Indentation means that we do not have to write down cash here, it is a credit, we have to write down here. So cash is 1,000 and the remaining is 2,500. Out of this 3,500 we have paid 1,000 as cash, and then remaining is accounts payable, and accounts payable is the liability, and normal balance of liability is credit, means liability increases on credit side. That is why we have to write down here, this is for the accounts payable, how much, 2,500. As I have told you, if more than one debit or more than credit, so here we have used three accounts, this is called the compound entry. Here you can write down the explanation, purchase office equipment. Now the second transaction is here. Again, there is no need to write down 2018 May again and again. You have to write down this again and again when your month will change or your page will change. Here the month is same and year is same, only the date is different. So we have to write down second, it means 2nd of May of 2018. What we did on second, purchase office equipment of same 3,500 and office supplies. So we are going to use two accounts in the debit side. First is because we have purchased office equipment, it means our assets are increasing, and when the assets increase we have to write down on debit side because assets has a normal balance debit. Same office supplies, this is also on the debit side, that is why we have to write down here. There is no need to make indentation. Indentation we have to make for the credit side. So this is the office supplies, and the, I will write down short form, and the worth is 500. Right now you have to decide how you have paid for this office equipment. As I have told you, there is only two methods, cash and credit. Cash, debit card, and your checks are also comes in the category of cash, and the second is credit card. Maybe you are using your credit card. So see here, a cash down payment was made again 1000. So you are paying cash, your cash is decreasing, and if your assets decreases, you have to write down on the credit side. So cash is 1000, and remaining, whatever is remaining, 3000, because total is 4000 remaining. So remaining we have to pay in 30 days. It is a short term liability, so accounts payable is 3000. And keep in mind, whatever amounts you are writing here, the total of debit should be equal to total of credit. You cannot write down 4000 here and only 1000 here. No, the total of debit and credit should be same. And another thing is, sometimes you will see in the transactions a cash down payment was made 1000, and the remaining, you will not see this amount here. You have to calculate yourself what is the remaining. To make the total of the debit, it is 4000. Out of 4000 you have paid 1000 as a cash. Remaining, what is remaining? 3000, where you have to pay in 30 days. So this is the compound entry, more than one debit, more than one credit. And this is the definition of the compound entry, which I am going to show you again. An entry that has more than one debit or more than one credit. So I hope the concept of compound entry is clear. If any point is not clear, you can ask me. Subscribe to my channel, and thanks for watching.